Today, we got an update from the Office of the Superintendent of Financial Institutions on the most significant risks facing Canada's financial system. In their report, they warned of elevated inflation and signs of weakening credit quality, particularly in the commercial real estate market, citing higher interest rates, construction slowdown, and rising office vacancies. And they aren't the only ones raising the red flag about the pressures against the commercial real estate sector or within the sector. The Altus Group released their 2023 Canadian property tax benchmark report, and in it they highlight what they say is a property tax system that's increasingly tilted against commercial real estate. So what does this mean, and how much are commercial real estate owners being impacted? Let's bring in Ryan Fagan, Head of Operations and Technology in Tax Canada at Altus Group. Thanks so much for joining us today.
Oh, thank you for having me.
So you look at this commercial to residential tax ratio. Why is that ratio something important to consider?
So we started this report 20 years ago. So Altus partnered with RealPAC, and at the time, Toronto and Vancouver specifically had very high commercial rates. So we represent most of the large commercial operators, so they ask us to kind of help highlight and advocate for a better business community. So we went through, and the fair ratio generally is 2 to 1. And basically what that means is if the same value of a commercial property to a residential property, the commercial property would pay twice as much tax. So again, that would be our goal. And we've done the study once a year for 20 years now. So we have a good amount of background on the data. And overall across Canada, the current rate is 2.82. So that basically means on average, commercial property would be paying 2.8 times more tax than a residential property for the same value.
Who sort of defines that 2 to 1 ratio that would be fair?
It's just a more accepted principle. And again, us and RealPAC are on obviously the side of the business community.
Yeah.
Obviously, property taxes is the second highest operating cost next to debt services. So it's a very significant number on the line of any business owner or operator. So it's you need to pay attention to it. So the 2 to 1 is a fair rate that we look at for a business to operate and be successful and build a vibrant business community.
You said across the country, the sort of average, I guess, is 2.8, but it does vary area by area. There we have your numbers there on the sort of latest ratio. So why is it higher in some areas than in other areas?
Again, tax policy is a big thing.
Yeah.
The other thing is the frequency of reassessment. So as values shift, the tax ratio will shift. So if you look at something in BC, Alberta, Atlantic, they have annual reassessments. So basically, the assessment base helps determine the tax rate. So to create the same amount of taxes for a municipality to operate year over year is really a function of adding up the total base and determining what tax rate needs to develop that tax revenue. And generally, you're looking at a residential base and a commercial base. So we're in Ontario, there hasn't been a reassessment in over 8 years. The provincial government continues to freeze the assessment. So there's a lot of inequities in the tax system in Ontario.
Can you break that down just a tiny bit more? Because the value part of it, I haven't wrapped my head around how exactly it all connects.
Okay, yeah, sure. So basically, the ratio itself, we just took the commercial rate that's applied to commercial properties for the property taxes, and it's a direct comparison to the residential rate. So the ratio is fairly simple at that. To create property taxes, it's really, the simplistic form is your assessed value times the tax rate equals tax payable. So that's where that comes from.
Okay.
There's generally a band of fairness where the residential and commercial tax rates have to be tied to a certain ratio, and that again is defined by each provincially at a tax ratio meeting. Like it's how their tax policy works.
Okay, and so those assessments, where are they happening more often than not?
Yeah, it's generally like across Canada. Some assessment jurisdictions are provincially governed, and others are municipal. So if you look in BC, it's BC Assessment manages that. They have a mandate to do proper reassessments annually, and you'll have up-to-date market values. and somewhere in Ontario, we're still being taxed on values of 2016. So right through the pandemic, when you had enclosed malls suffering, hospitality suffering, they were still paying taxes based on high market values of 16. So again, there's an inequity of distribution of taxes.
So how do you think that ratio would look if it was reflecting the values of today?
Well, you look at again, it all depends on is your residential going up the same amount as your commercial base. If they're going up similar, the ratio should stay similar. And then if you look at Toronto and Vancouver, when we started the study 20 years ago, they've actually been moving down to a level of fairness, but they're still well above the average, where we've seen increases in Quebec. So Quebec City and Montreal was the highest ratio at 4.33 this year. And Alberta was the highest year-over-year change. So they increased their ratio over 9% from 22 to 23.
What are some of the implications of having a high ratio in some of these areas? What sort of fallout does that end up having in the commercial real
again, the
estate
tax,
space?
like I say, it's the second highest operating cost. Yeah. So it's the viability of the business community. Obviously, taxes get pushed down to tenants, small businesses. So it's really how can they function? And then, if business has a decision on whether I operate in Mississauga or Toronto, obviously a tax rate is a big thing to look at.